Good afternoon, traders. I hope you're having an awesome day. It is Wednesday, August 13th. Welcome to Simpler Trading. Glad you are here. If you are a day trader, I believe today's video is going to benefit you greatly. I'm going to talk about something that had me stumped, honestly, for years as far as my day trading went. And that was during the first 15 minutes after the bell. There can be heightened volatility. You will all often see a lot of fake outs, both to the upside and the downside during the first 15 minutes. And there is nothing worse than entering a trade at the open only to be faked out by the first initial price action. And then the rest of the day plays out opposite of how you expected. Good afternoon, Joseph. Good to see you in here. So, I'm going to get started, and it's really cool because yesterday and today was two completely different ways that I traded the first 15 minutes. Yesterday, I did not start a day trade during the first 15 minutes. I actually waited and today I took an aggressive approach and traded right at the bell. So I thought that was pretty cool since it was what I wanted to talk to you all about today. That I would have two very recent examples of how I traded this. One, waiting the first 15 minutes, and then today trading during the first 15 minutes. So I'm going to use the SPY chart here. Honestly, it does not matter the ticker that you are choosing to day trade. I use SPX actually to day trade if I'm going to be trading the S&P 500, but this spy chart will work out perfectly for me just to show you my process and deciding when to trade in the first 15 minutes and then when to wait in the first 15 minutes. For those of you who don't know what this cyan colored box right in the middle of my screen is, this is the PMZ. It is a trendy indicator and it is my absolute go-to indicator for day trading. I have been trading this for just over 3 years now. My first 30 days of focusing on only trading the PMZ or the pre-market zone, I was able to double my account, and I have since doubled my account many times using this indicator. So, of course, I have quite the love for this indicator. But honestly, what I'm going to show you, whether you trade using the PMZ or whatever indicator is your go to, it really doesn't matter because the first 15 minutes, I believe we have clues before the bell even rings. Now, I will say most of the time, I am at least waiting for this 5-minute candle to close before making my decision of am I going to jump in the trade or not. So, the first thing that I'm looking at, some people do not have pre market or after hours price action on their charts. I do on every chart. The extended trading hours is on, and because I believe that there is a lot we can learn from that pre-market price action. I pay the closest attention to an hour before the market actually opens. So the market opens at 9:30 Eastern. I'm watching what the price action looks like from about 8:30, sometimes 7:30, up until the opening bell. So this is yesterday, August 12th, SPY chart with the PMZ here. And the first thing that I do when determining how I'm going to day trade this is I'm going to mark the pre-market high, which on yesterday was 640.10. And then I'm going to mark that pre-market low. You can see here that we have this big imbalance candle that occurred at 8:30. There was some economic data that came out. So in the case of SPY yesterday, I used the bottom of that candle to create a pre-market low, pre-market high. This was the range that before the market opened, price was trading in between. Okay, so once I have that on my chart, I then look at where my PMZ is lining up in relationship to that range. And yesterday, I can see that above this pre-market high, which was uh, those labels up there for today, uh, 639.10, I had about a dollar to the upside before I was at immediate resistance here. Okay, that pre-market high. So I had about a dollar to the upside. That is not the greatest upside reward for me because the width of the PMZ on this day is we just figure from the top to the bottom, that is your risk. And this day it had a dollar risk. So it was only a 1-for-1 to the upside, not the best risk to reward for me. I will take trades like that are at least a 1-for-1, but I would prefer a 2-for-1 or a 3-for-1, honestly. So I knew immediately that I had resistance just above. Then, if I looked at the downside, to the downside, I had immediate support. Okay, that is this purple line here. That is another trendy indicator. And when price is above it, I'm expecting it to be support. So if I box this in from that low of that 830 candle and this trendy edge here, this is my immediate support. So below the PMZ yesterday, I had about a dollar reward to the downside and about a dollar reward to the upside, and my risk was also a dollar. So right away, before the market even opened, I knew that and knew that more than likely I was going to set out and not trade these first 15 minutes. So let's look at the price action. On the first 5-minute candle, price went up and over the pre-market zone, which is a trigger long. Now, I waited for that candle to close. The next candle came down and gave me a bottoming wick, looking like, okay, we're making higher lows here. So then I commit to that very next candle to see if I'm going to get a breakout. And what I was looking for would have been a breakout above that pre market high. Instead, this candle gave me a breakdown right back to the bottom of the PMZ. So in these 9:30, 9:35, and 9:40 candle, I could tell right away that price was choppy. When I get that confirmation, then I am looking to trade from the what I call extreme levels. So rather than taking the trade and getting whipsawed here on this very volatile price action, I would rather wait for a pullback to this lower zone here and then take a trade off of there. Okay. So yesterday, I did not trade the first 15 minutes because pre-market price action told me that more than likely we were going to experience chop in that first 15 minutes. Now, once price came down to my zone that I was looking to go long from, then we got a trending day and very, 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 very good profits to the upside. So, setting out the first 15 minutes kept me from getting whipsawed back and forth. All right. Now let's look at today's price action. And I want to do the same thing and show you why today I chose to trade during the first 15 minutes. Now, you remember what I did first, right? I went to the pre market price action looking for the pre market high before the market opens. And then right around an hour, right before the market opens, looking for that pre market low. So, of course, none of this had occurred when I knew that I had resistance via the pre-market high and support via the pre-market low, I knew that on this 5-minute candle, if and it opened right here, right at that pre-market high. And once it went above there, I was like, okay, the market is bullish, right? You got to know the trend of the market on the higher time frames. That gives me a bias, so to speak. And because this market was bullish yesterday, making new all time highs. We will often see a continuation of that trend if during the overnight session we don't just completely tank. And we did not during the overnight session. Last night we were actually up nicely. So that told me, okay, if price gets it's already above the PMZ, so my bias is to the upside. If we can break above that pre-market high that happened 5 minutes before the bell rung, that is an opportunity for me to be aggressive and take the trade to the upside. And my first target was right up here and it was hit almost exactly. And it was an extension target because I have no candle structure above all time highs. So this was a great aggressive trading in the first 15 minutes trade that paid very nice on those SPX contracts. All right. Any questions so far? Oh, thank you. I'm sorry the screen is blurry. I don't know how to fix that. I don't typically stream using this on my personal channel. I use OBS, and so I'm not sure how to fix the quality of that. I apologies, Kelvin. All right. So let's take a look at another example because Tesla gave an example of a trade that was tradable in the first 15 minutes. It had a huge, huge imbalance candle out of the PMZ. And I'm just going to zoom in on this day right here on Tesla. Come on, Toss. Work with me. All right, we're going to give that a minute to do whatever it's doing, and then I will zoom in. So Tesla, sometimes you will get such a powerful move in the first 5 minutes of the day that just completely takes price way over any kind of pre-market high. You can see here on this day, which was Monday on Tesla, the pre-market high was here at 336.69 and the low that I had marked was 333.50. So, on that first 5-minute candle, Tesla created a huge imbalance candle. I mean, this candle is from 334 all the way up to 341, a $7 move in 5 minutes. So, this is what we call an imbalance candle. So, in this case, there was a very large, and you can tell, I don't have volume on my chart, and I don't need to have volume on my chart because I can tell by the size of the candle that this move came on very high volume. So, I normally my trade would be to wait for Tesla to pull back to this PMZ before going long after a big huge move like that up above the pre-market high. But there's another way that you can get into a trade like this if you don't believe that it is going to pull all the way back. And in this case, that would have been about a $5 drop. Okay. It was very obvious that this was a very bullish move on the first 5 minutes. So if I have a big imbalance candle like this on the first 5-minute candle, and I want to trade the first 15 minutes because it meets my criteria of being above the pre market high, then what I can do is I can run Fibonacci retracement from that low to the high. And then I pay attention to the 236 and the 382. And this would represent the area that I would be looking to buy a dip on a quick pullback. I do not do this all the time. I do this when there is a huge explosive move in the first 5 minutes and it has brought price above that pre-market high. So you can see here, price never came back not yesterday, Monday to the PMZ, but we could still trade this to the upside by using Fibonacci's and a pullback into what we in the trendy room call the bull channel. And there would have been your entry between 339.70 and 338.64. All pullbacks to here were by the dip opportunities, and up, and away she went another $8 from even the very top of this buy the dip zone. So this is an example if you have a very large candle and high volume, big volatility above the trigger, right? How you can get in this trade. Donald, great question. Donald asks, where would your stop be in Tesla? So trading this bull channel right here, Donald, my stop would have been a candle close below this 38.2, a 5-minute candle close below here. I don't want to get wicked out on these trades, right? This is a liquidity grab. It is just trying to get people to stop out only for price to move in the direction that they were anticipating. So for me, it would have been a 5-minute candle close below here. Now, if I was just trading the PMZ, right, Donald, because you're in the trendy room, so I know that for me, I like 50 cents to a dollar of risk on my day trades. And in a name such as Tesla, it would definitely be a dollar, even $2 of risk. So if it was from the PMZ, my stop would have been a lower low here. If it was from that bull channel, then my stop would have been a candle close below the 38.2. All right. All right. Let's look at an example to the downside since these have all been to the upside, and Broadcom actually provided an example today. Ah, yeah. Thanks, Kim. Yeah, guys, do me a favor. Hit the like button. I always forget that. Sorry, but I would appreciate it. Takes like 2 seconds. Click the like. It really helps us out. Okay, let's look at Broadcom. So you can see I have a pre-market high marked here. I have the low marked here. This is my PMZ. My bias, if price is above it, is to the upside. If price is below it, it's my bias is to the downside. Then I need to look at my risk to reward. So today the risk on Broadcom was 66 cents. My reward above the PMZ was about equal to that, about 66 cents. So my better reward was to play this to the downside if it sets up, because my reward to the downside, that first target, would have been about $2, right? Yeah, $2 reward. So that's almost a 3-to-1 risk to reward. Great risk to reward. Now, I personally wasn't looking at AVGO today, trade today, because I was looking at NVIDIA. But AVGO, I just happened to see it when I was preparing for this session and was like, this is a good example of a downside play. So let me talk about it and what I see on this first 5-minute candle. First, I told you if price is below the PMZ, my bias is to go short. All right. We created this all-time high and pre-market high just above the top of the PMZ. On this first 5-minute candle, you can see that price never even came up to the top of the PMZ, and you got this blue arrow here. This is a trendy turn signal, and it's indicating a potential shift in trend or momentum or price action. This is saying, hey, price could be headed to the downside, so watch yourself if you're trying to go long. That's what this blue arrow says to me. All right. So then on this would have been a trade that I would have been willing to take a trade in the first 15 minutes, because after I get the first 5 minutes and it confirms my bias to the downside, I know I have a great risk to reward to the downside. Then I watch that next 5-minute candle and it comes up and hits the top of the PMZ that is resistance. And you can see there was tons of selling pressure there because you created that topping wick. And guess what? We did not take out the pre-market high, which also tells me, hey, bias to the downside. So once that candle closed there, right? And we created this big topping wick on this candle right here that retested the PMZ. This would have been 10 minutes into the market. This would have been a great short opportunity right here, down to that $2 reward, followed by each one of these trendy levels on my chart. And at the end of the day, you're looking at a $10 plus, almost $11 reward to the downside from this first 10 minutes in the market. Okay, so that's an example. This doesn't just work for bullish trades, it also works for bearish trades. Hey, Mike, good afternoon. And Kim, Good afternoon. Does anyone in the chat have a chart that you maybe were day trading today and you want me to take a look at it and explain what I would have been watching for and what I see out of the first 15 minutes in the market? And I will tell you, according to how I trade it, if I would have traded it or sat out today. And I'll take the very first request because we're almost out of time. So, what is a name you want me to pull up impromptu right here, right now, that you either day traded today or that you just want to see what that pre market price action would have told me, as well as the first 15 minutes? Awesome. HD. Let's take a look. Good old Home Depot. Slide Bud, I might have time for Microsoft. I absolutely love trading Microsoft. So let's look at Home Depot. Let me clear off this drawing set. And what we're going to do is we want to look at first the pre-market price action. Okay, here is the high. And going I mean, really, I'm just going to go here. HD doesn't have a lot of pre-market price action. That's why you see these little tiny blips on the screen showing very low volume. But I'm going to use this candle here. Okay, so on the first 5-minute candle, Kim, what I would have done is this would have been a wait, watch, and see scenario for me because you can see by this topping wick that this is caution, right? A lot of selling pressure here. Yes, it was above the pre market high, which is bullish in my uh, opinion. All right. It wicked up, but there was a lot of selling pressure in this first 5 minutes. It did close above the PMZ. The wick down came right down into that candle 10 minutes before the open, and that is a good bullish sign. So this first 5-minute candle for me would have been, all right, I'm going to watch and see. Then the next 5-minute candle opened up here again above that pre-market high. That is bullish. At some point we wicked down. Now notice that this candle here ate up or got rid of some selling pressure up in here because it closed about halfway of this topping wick. All right. So I would not have taken the trade on this candle. I just didn't have enough clarification. Now, this candle here, wick down to your PMZ again, it created a higher low. And this would have been a go candle for me. All right. And very nice price action all the way up here, about $6 above the PMZ. So in this case, it would have been for me really a watch and wait until that third or the close of the first 15 minutes. But this retest of the pre-market high, buyer stepping in, I would have used 40.35 as my trigger long. And once price got back up above there, that would have been a trigger long for me. And then one more, just real quick. Microsoft, I haven't looked at it on a 5-minute chart even to see where it was. Oh, wow. Yeah, I see that. All right. This is a great example right here. There's your pre-market high, right? There's your pre-market high. Then let's go over here. About 8:30, you can see price just consolidated in here, right? You got a trendy edge right here. I would just use this trendy edge because it's there for me and I'm expecting it to be support. So I have immediate resistance above the PMZ. Okay. Then I get a test and it does not take out the pre-market high. I get a trendy turn signal. That right there is telling me, okay, my bias is to the downside on this name. The second candle comes down and look, we made a lower low. We took out that pre-market low there. That would have been the trigger to go short. My stop would have been, and you can choose, the risk was 67 cents. For me, I would have increased my risk and used, if we made a higher high here, this would have been my stop. And then you can see the levels to the downside that would have been my targets. And actually, Microsoft is coming into that lower daily edge, which would have been an awesome target to the downside. All right. So this one would have been a trade in the first 15 minutes. I noticed a lot of charts I was looking at. I actually traded NVIDIA in the first 15 minutes. I went long and took some profits, and then I've since scalped it a few more times. But this was also a trade that would have set up, and it would have set up to the downside. One target, you could have broke even stop right here, break even stop right here. Once it went back below the PMZ, you could have taken it again to the first target, then have a break even stop in, but it would have not br stopped you out at break even on this second time of trading it. You would have, or I would have stayed in all the way to this lower daily edge, which would have been a target, right? Yeah. Guys, listen, at the end of the day, time is an edge for us. There is, in my experience, and I'm just going to talk about myself, my emotions have cost me more money in the market than any strategy. Okay. That's bottom line. And the first 15 minutes of the market is going to give you the most heightened emotions you will experience throughout the day because there is increased volatility, there's typically increased volume, and you get big moves, right? Both up, both down, and they're looking to stop you out. Then the market makes a decision of which way it's going to go for the day, and your emotions are not in a good place. And it caused me, back before I learned to trade with discipline and a process rather than emotions, it caused me to make trades that I normally would not have made just because my mindset was way off. So I encourage you to implement some sort of strategy that will help you gain clarity in those first 15 minutes of the market. It isn't always the first trader to get in a trade that is the most successful. It's the trader that can trade with discipline and patience and repeat a process over and over again that is going to be the most successful. All right. Again, thanks for joining me today. I hope you found this content valuable. Please hit the like button. Make sure you're subscribed to Simpler Trading. This is the best community of traders, both on the mic and off the mic, that you will find out there. If you're not a member at Simpler Trading, we have all kinds of trials for $7 for 30 days. Join us and find out why I say that we are the best community of traders you will find. All right. Until next time, guys, have an awesome day.